today is a landmark day for our company. When I first became CEO, I talked about a relentless focus on growth. And when we look at growth, we also said it's going to be focused on hybrid cloud and AI. That's a $1 trillion total addressable market. And given that $1 trillion market, and given our confidence in the platform that is based on the Red Hat technologies, now is the time to focus down and double down on hybrid cloud.
Here's the press release. IBM to accelerate hybrid cloud growth strategy and execute spin-off of market-leading managed infrastructure services unit. They're going to focus on hybrid cloud growth, which is a $1 trillion market opportunity. The new company will immediately become the world's leading managed infrastructure services provider. It has relationships with more than 4,600 technology-intensive clients in 115 countries, including more than 75% of the Fortune 100, a backlog of $60 billion, and more than twice the scale of its nearest competitor. The new company brings with it a $500 billion market opportunity. Hybrid cloud is essentially the traditional cloud on the internet coupled with in-house processing. The key to think about is how many companies out there that don't want their info on the cloud. Think of companies that need to keep their information private and more secure, so they want to do it all in-house. This is what IBM's target is with the in-house processing segment of their hybrid cloud business model. Now this is not going to be a walk in the park. IBM still has tremendous competition from the likes of Amazon, Microsoft, and Google, who are years ahead. But the hope is that their $34 billion acquisition of Red Hat will help to move IBM forward and make it a legitimate contender with the likes of Amazon, Microsoft, and Google. This idea to split the company was definitely the smartest move for them, and I think shareholders can potentially benefit greatly now too. When the company splits in late 2021, you'll essentially now own two companies. One that is a cash cow that brings in a ton of revenue and pays a nice dividend, but has limited growth opportunity. The second company will be all about growth. So in essence, you're getting the best of both worlds. If the new company struggles, you still have consistent cash flow to rely on from the other segment. Also, spin-offs usually do very well as the parent company does everything it can to make sure it is successful. What went wrong with IBM? Critics of the company have blamed IBM's downfall on it being run by investors and businessmen instead of giving the reins to a specialist in the field. There was too much focus on profits and cost cutting and this short-term mindset, and too little focus on innovating and research and development and the things that IBM has historically been all about. If you look at a comparison of the IBM research and development budget spanning the last decade, you see they spent significantly less than their competitors did on research and development. One need look no further than IBM's research and development budget to explain their underperformance. If we look at their research and development budget from the last decade, you see that in 2009 it was $5.8 billion. In 2018 it was down to $5.3 billion, and then it came back up to around $5.9 billion in 2019. When we compare that to their competitors like Google, for example, now obviously Google has a lot more revenue, but the point is how much they're putting into R&D here. We see that in 2009, 1 decade ago, Google's research and development budget was under $3 billion, and each year it increased to where it's now at $28 billion. They've increased it almost 1,000%, while IBM decreased their research and development budget. Microsoft's research and development budget shows a similar story. If we look back a decade, you see that their R&D budget was around $8 billion a year. Each year it increased to where it now sits at over $19 billion a year. So more than doubled. While the company's focus on short-term profits and lack of a sufficient R&D budget definitely played a part in this, a lot of it was definitely also due to the culture problem that was present at IBM. The company's too big, when it gets too big and you're trying to do too many things, they have a lot of competing interests. The company needed a visionary to come in, take the company by the reins, and go in the direction it needed to go, and I think Arvind Krishna can be that leader. He's been at IBM since the 90s. He was Senior Vice President of Research. He later became Senior Vice President of IBM's Cloud and Cognitive Software Division. He's co-authored more than a dozen patents. He also led the building and expansion of new markets for IBM in artificial intelligence, cloud, quantum computing, and blockchain, and he was the driving force behind IBM's acquisition of Red Hat in 2019. This is definitely what you want to see. This is the leader that IBM needed, and he has often been compared to Microsoft's Satya Nadella. He had a similar background as Krishna and saw the importance of cloud early on, and if his tenure at Microsoft tells us anything, it's that there's a lot of potential for IBM to benefit greatly from the direction Arvind Krishna plans to take it in. In 2019, IBM ended its highly criticized share buyback program, distancing itself from a history of being too financially minded, and hopefully will continue this practice and get back to innovating. With Krishna at the helm, I'm confident it will. So what do I think? The IT infrastructure segment will continue to be a cash cow for many years to come. It's a great idea for IBM to part with it now, as they will get a great valuation for it. There's a $60 billion backlog, which shows there's still huge demand. It's better to do this now and split the company than wait 20 years when they will get nothing for it. Now the company can solely focus on the sectors that are growing the most and innovate, which is cloud and AI. Having a company get too big like IBM did can create divisions within the company, siphon cash, and just be a huge distraction. I think this is a great move for IBM, and time will tell if their new leadership can turn it around. They have a great CEO now, and if anyone can get the job done, I believe it is him. IBM does, however, face an uphill battle, and we'll see if they're up to the task or if they are too far gone in their competition with the likes of Amazon, Google, and Microsoft. Before this announcement, I was starting to consider selling my shares of IBM, as it has been a lackluster performer in recent years, but I think I will hold for now and see how this develops. Yesterday's losers are often tomorrow's winners. This is a company that has fallen out of favor, but I think it has a lot of potential to turn it around now. They're making the right changes, and with Arvind at the helm, I think the future is bright. Let me know what you think of IBM in the comments below, and whether you're buying or selling. This is Vinny from the Investment Club, and I'll see you next time.